Governor Kuroda was very clear in saying that China was also one of the big reasons they had to move, its weakness affecting everybody. And one of the problems the Chinese have had is that their currency, the Yuan, is tied to the dollar. Let's take a look at what the impact of that has been. Over the last year, we have seen the white line shipping out of Shanghai, exports from China on a regular decline. Then you see in August, the yellow line, the Yuan gets revalued. It starts to move lower, and we start to see the exports from Shanghai flatten out and move higher. So the Chinese engaging in a little bit of currency wars already as well. And now we want to know what happens next. Geoffrey, is China going to be forced to respond as well?
For now, probably not. China and Japan, they're more complementary economies, rather than competitors. That might change, in the future. But I don't think the PBOC will be too fussed about this. And also, PBOC will still be worried about, how a sharper move lower they're going to be, how much that would contribute to capital outflows. So that's the other side of the equation. You can move your currency lower, but not too much, because right now the pressure for depreciation is not engineered by Beijing, but it's actually people onshore wanting to get their money out. So a different dynamic.
Geoffrey, this is a three-tier system now. It's getting quite complicated. And given that most of the JGBs are held by Japanese, what does this mean for older people, which obviously are, the bulk of the Japanese population?
Well, firstly, they'll have to be very careful that negative rates are not going to be charged on retail deposits. And I think right now we don't have to worry about that. I think in Denmark, last January, about 90, so you talk about the tiered system, about 97% of Danish sight deposits were charged negative, but that wasn't passed on. But up ahead, I think Japanese companies, they'll have to invest more overseas and invest in risk, capture high yield, and also pay more wages to the working force population so they can pay more taxes to fund the pensions.
So, Geoffrey, overall, who has the toughest job among central banks, and what does it mean for your smartest play into 2016?
I think all central bankers will tell you they have the toughest jobs, right now. But if you look at what separates the Fed, from everyone else is trying to ease. Fed is actually trying to normalize. So, going up to Brian's earlier point.
Will they be able to normalize? It's crazy in this kind of environment.
Indeed, if you look at market pricing, I think what came out of the Fed decision was they're not really pushing back, against markets' more conservative pricing right now.
Brian Angerame, this is just one of the many things that have overhung the markets. The other, oil prices. Now, U.S. companies very much affected by oil prices. It's an input cost for many of the companies that you buy. Is that going to change things if we have now put a floor under oil as well?
When I look at the dynamics between companies who use the oil as their feedstock versus those that benefit from a lower oil price, I'm kind of surprised by the market's behavior. It seems like right now we're correlating lower oil prices with the economy is tanking, but 3/4 or 2/3 of the U.S. economy is consumer and service led, which would benefit from lower oil prices. So I'm a little bit surprised that the market is equating lower oil prices with Armageddon or something horrible.
Are you making any investments because of the huge drop in oil?
Well, I'd have to say that as it relates to companies that are earning money from producing oil, refining oil, et cetera, we're to a point now where you have to look. You see earlier in the week, you had your first oil E&P do an equity deal, raise equity to appease the bondholders and stave off what most E&P companies were heading toward, which is zero for an equity price. So that's a good sign. As it relates to the suppliers of oil in the world, the United States is rolling over in its production. I think you'll see probably 1 million barrels of oil a day come out of U.S. production. At the same time, you have the Saudi Arabians and maybe the Russians beginning to talk about, hey, is this really what we want? I think neither of those countries want $30 oil. They're hurting.